So what we see on a daily basis too when we talk about crypto versus blockchain-based solutions is people confusing speculation with investing. So the simplified question you should ask yourself is, would you feel comfortable holding this particular token, this particular cryptocurrency implementation for any length of time, whatever the length of time is? I suggest to think about a period of at least 5 years, if not 10. So are you feeling comfortable holding your Dogecoin for the next 5 years in comparison to your BTC, to your ETH? And then if you look at the attempt of trying to classify these tokens, as I mentioned earlier, the single introductions that the Bitcoin white paper introduced was that of smart contracts. And what tokens are, they are standardized smart contracts. That's all they are. And there's two types, and you can actually filter CoinMarketCap and the other reporting websites for that. So there's coins. Coins are the native reward mechanism of a layer one of a blockchain. And tokens are basically API functions to a smart contract system. However, all these attempts to classify things like stablecoins are somewhat like trying to catch a falling knife, because the underlying technology is open source, still in development, and it's changing in nature. And then any attempt to use broad brushes for these, i.e. what I just read again for at least the hundredth time, is the conflation of stablecoins being pegged to the US dollar, as in US dollar backed. That is an utterly uninteresting implementation of a stablecoin. And we're looking more towards something like an algorithmic stablecoin. But overall, for the most part, it's misunderstanding of network technology, because rather than looking at the token itself, what you should be looking at is the client technology, so i.e. what we currently call a wallet. Because if you're looking back to the previous slide, what are users adopting? So they're not adopting necessarily Bitcoin, they're not adopting Ether, the reward mechanism on the Ethereum blockchain. Please don't confuse the two. You cannot buy Ethereum, you can only buy Ether. But the point there being is, if you expect adoption, so people don't adopt technology, they adopt solutions. So people didn't adopt the voice over IP protocol, they adopted Skype, they adopted WhatsApp. So if you ask your mom, then she will not know whether or not she actually adopted voice over IP, because she may use WhatsApp as a messenger tool, as a voice communications tool, and have no idea. So the larger point there being is, you have to look at the adoption of these particular underlying blockchain-based assets from the individual use cases, and the use cases will come with the adoption of actual applications. And we're going to walk through that. And maybe one other recent meme that popped up is that of Ethereum's Ether being super sound money. As I alluded to earlier, money is simply a contract between two or more people, which means it's a vacuous term. By the way, a currency is simply the standardization of that particular contract. That's all it is. It's not that complicated. So then what we are looking at as investors, we're looking at what are the actual global market opportunities. I'm going to slide over here, because the tiny sliver in the corner is the current market cap of all cryptocurrencies, which is just about 1.7 trillion as of this morning. However, what we are really looking for is the implementation of blockchain-based solutions to the asset classes that are still in the realm of fiat enforcement. So global real estate as the largest group, global oil reserves as a very large group. Then a more accessible to blockchain-based solution market is that of bonds. So that's our near-term focus from our investment perspective.